Hey traders, Mike here. Welcome back to my channel. Now back in early 2021, I profiled an investor who made over $40 million by betting on one stock. His name was Keith Gill, or as known as Roaring Kitty on his YouTube channel. Now if you're interested in watching this video, I'll include it at the end of this video. Well, Keith wasn't alone in making millions on this company's stock that you may have heard of called Gamestop, a video game retailer. In fact, it was reported that one hedge fund made even more, profiting over $700 million on the stock's rise. So in this video, I'm going to talk about how this hedge fund was able to make hundreds of millions of dollars in profits and how they timed the trade perfectly. Now, in addition, I'll share one of the key things that you should look out for to tell you that it's time to take profits on your trades. So let's get started. One of the top performing hedge funds in 2021 came from a company called Sanvest Management. Now they posted a return of more than 85% for their investors, and the single biggest reason why was due to their investment in Gamestop. Now that trade was the company's single best performing ever in their 25 years in existence. Now, before the meme stock craze that started just early last year, when retail traders teamed up on Reddit's Wall Street Bets forum to push up GameStop's shares, the fund was interested in buying shares in GameStop in September 2020, mainly as a contrarian play. Now, the hedge fund founder and manager Richard Mashal saw a slew of analyst sell ratings and extremely high short interest, meaning that there were many people betting against the stock and believing that the stock price will decline. Now, it's a classic trading opportunity that their hedge fund typically looks for and puts money into. A stock that is out of favor with investors and heavily shorted by other hedge funds. Now, as we all know, the retail buyers triggered a massive short covering amongst the hedge funds who were short and caused the stock price to rise sharply from under $10, the price that Sanvest bought their shares at, to over $480. Now, Sanvest Management was an anomaly in the hedge fund industry where plenty of funds got burned by the unprecedented short squeeze. Melvin Capital was one of the biggest hedge fund losers as they reported a 49% loss in their investments and had to actually get an emergency $3 billion cash infusion from their backers just to stay afloat. Despite the incredible stock price performance of GameStop, the fundamentals of the company just didn't fully support the high market valuation of the company. Now, the company is profitable, and its last quarterly earnings in October 2021 showed a net loss of $105 million. In fact, many Wall Street research firms still have sell ratings on the stock right now and indicate that investors are now paying more attention to profits and valuations in 2022. And as you can see from this chart of GameStop, this type of meme stock may be finally coming back to reality since reaching an all-time high of $480 per share. It has fallen sharply to a current price of $98, 6% price drop to $40. And you can see this is the price level where it dropped to in February 2021. Now, for those who are still holders of the stock, many have seen most of their profits evaporate, or worse yet, are holding on to losses. Many students who I work with always have the challenge of seeing a stock that they sold for a profit go even higher in their favor, or in some cases double or triple. So the question I always get is, how do you know when to sell? Well, the honest answer is we don't know, because we can't predict the future. However, there are a few things that you can look for, such as past support or resistance levels on the chart, or when the company stock gets a lot of coverage in the media. Well, for Richard at Sanvest, the trigger to sell his entire position in GameStop was all due to an Elon Musk tweet. The Tesla CEO tweeted GameStonk on January 26, 2021, after the market had closed. The next day, the stock price of GameStop reached its closing price of $347.51 per share. And this was the moment Sanvest sold its entire position in GameStop. Now, even though the next day the stock price would go even higher to $480, you can see this from the chart that the volatility was extreme in the stock, ranging from $120 to $480 in a single day. Elon's tweet was basically pouring fire on top of a burning stove, and Richard and his team just looked at each other and thought, well, there's no other catalyst or positive news that would be able to top that. For them, it signified peak momentum, and it meant they had to sell. Plus, there were 700 million reasons why. So what's the lesson here for all of you? Well, It's buy a stock when no one talks about it and get the heck out of a stock once it's all over the news. Thanks for watching. If you like this video, hit that like button, and if you haven't already, hit the subscribe button below. I'll see you guys in the next video.